Okay, recording this video after close of trade Tuesday, 18th September 2012. Actually recording this video pretty late, still a bit jet lagged. It's the next morning here, Wednesday in France. And pretty frustrating couple of days, really small ranges, low volume days. We had about 1 million contracts traded today. The range top to bottom was, I think, less than 6 points. Yesterday was less than 8. And it's really tough to make kind of decent trades on small ranges, particularly if you're looking for profit targets of 4 points in days like that. Did think we'd come off over the last couple of days just because that Friday kind of spike, we saw a whole bunch of profit taking at the highs there, and I'll just show you that in another chart. In terms of better X trend, still kind of trailing this stop up. On the continuous contract day and night session, you can see the stops kind of below that first breakout bar. That's the Draghi kind of breakout bar. When you look at the at es.d, so this is day session only, you can see the stop's been trailed up to above the Ben Bernanke kind of announcement day there. So that was a pretty important kind of move up. And got quite a few emails just talking about average trade size because, let me just show you this, Zero Hedge from time to time puts up a chart that's got kind of better pro-am and average trade size on. It's sometimes difficult to know who you know is actually speaking on Zero Hedge because everything kind of is listed under Tyler Durden. But I think this is Tim Bakshal of Capital Context, and you'll see him from time to time, CNBC. Super good guy. He's out of San Francisco. I think he's a Brit kind of originally, but he's got kind of better pro-am, and you'll often see kind of references to the Twitter feed on Emini-Watch, and this kind of chart kind of pointed out. The point, let me just go back to the chart that he was referencing, is this is the average trade size that was going on over the last couple of days there, that kind of breakout day and the day after, and you can see we've got this huge spike in average trade size, which often does show kind of professional activity happening with those high average trade sizes. Just a point of caution, this is, I mean, it's a huge reading up here above 6. And what was going on was this day here, it was actually rollover day. So rollover day, when you're looking at continuous contracts, is really kind of tricky because on that day people are trading the two kind of most liquid contracts. Everybody's supposed to move to the new contract, but what I actually find on rollover day is the majority of the volume kind of continues on the old contract. It's not until the day after rollover that the majority of the volume kind of moves to the new contract. So what you have to do if you want to get a little bit more clarity, I mean, there's still directionally correct in terms it was a very high average trade size, but what you need to do is just kind of back it down a couple to look at the individual contracts here. So this is the ES U12, so that's the September contract, and you can see on that day there the average trade size was reasonably high, but nothing particularly special. I think it was about 4.7 average, 4.7 contracts traded. But when you looked at the new contract on the Z contract, which is the December contract, you can see that it was significantly higher. So it was over 6, I think it was about 6.3 happening here. So you can see the professionals had kind of moved into the new contract, and you know everybody else was kind of still trading the old contract, need more kind of amateur activity in the old contract. So to get a better view as to what was going on that day, you actually need to, I'd suggest, kind of combine the volumes and over those two contracts to get a better picture. When you do that, it ends up being a reading of about 5.1, so that kind of ends up kind of being down here in terms of average trade size. Still it's high, you know, 5.1 kind of ends up being kind of there. It is a high average trade size on that kind of rollover day, that Ben Bernanke day, and then the next day it was even higher, it was above 5.4. So definitely, you know, professional profit taking at those highs kind of going on, but just wanted to reference that chart that you might have seen at Zero Hedge, just to say that reading is maybe a little bit kind of overstated just because of the, you know, the nuances of using continuous contracts. Continuous contracts are great. I think they're extremely useful in terms of time saving and looking back historical charts, and particularly with systems testing. Without continuous contracts would be a nightmare because you have to concatenate, you know, kind of combine all the system results for the individual contracts. So they're really useful from that perspective, but they also have at rollover on rollover days. Just be a bit careful kind of interpreting some of the charts and what's kind of going on. Anyway, so talking about that kind of high, and I was saying on the weekend video that the better trend systems were itching to take profits, and they have done so. So we had that whole cluster of buy signals kind of going off over that kind of 2-week period. Finally, they took profits on Monday, and again, very nice to see. We got new equity highs on the better trend systems, which it's good to see. As I keep on, if I've ever referenced this chart, kind of say that not a line of the code has been changed since they were released, and they were released kind of back here. So it's kind of continued to power on. This is about a 10-year history of what those systems have been doing. And they've kind of rolled over for the time being, and what we're doing at the moment, I think, on the 40,500 tip chart, we've kind of come into this pullback in an uptrend level. So we had this kind of spike up here, which was kind of end of trend on 4,500 tip bar chart. I think the 13,500 tip bar chart ended up trying to make an end of trend over this last kind of sequence. So we've come into our pullback in an uptrend. We've got to make end of trend on the 40,500 tip bar chart. We could maybe see they're trying to goose it up overnight tonight in order to kind of get this thing going, so we could see kind of some kind of exhaustion pattern over the next day or two, and then we'll have to wait and see what happens from there. In terms of my trading, last couple of days pretty rough. On Monday we really had just nothing going on. This is the 1500 tip bar chart. This is the overnight activity. We kind of on the Sunday night. So coming into Monday, we had a little bit of volatility, but it was really tight ranges. I took 2 trades, lost two points on 2 trades, and called it quits, just because I don't know. I think since the Night Capital kind of debacle, it's really changed. The character of the markets just doesn't move as kind of quickly, and it's not as smooth. It's really kind of jerky, and they'll just go quiet and then kind of a little bit of activity. It's odd. I mean, if that's the effect of one algorithm on high frequency trading kind of not being active, I'd please switch it back on. But anyway, we'll the best kind of setup on the Monday was after we'd had exhaustion buying, bearish divergence kind of come in here, and we broke that support line. So breaking that support line around 55 and a half, kind of around there, ended up in a nice little kind of swift move down. You'd have to have a pretty good entry and a good exit at 4 points to kind of take that move out. So pull back to end of trend. The exhaustion selling kind of getting the move going, and exhaustion selling kind of ending the move. And the blue professional bars kind of come in here. It wasn't a classic setup because we had blue professional bars at the bottom of this type of little consolidation range here. You can see there. It would be really nice if they were happening at the highs there, but sometimes things aren't as elegant as you'd like them to be. And then on Tuesday's activity, really we had a little bit of a bottom being made. We'd had our exhaustion selling the prior day. We had blue professional bars kind of coming in at the lows of these kind of moves down here, and so eventually this move kind of broke up to 55, but that was it. Just ran out of steam, exhaustion buying at 55, and that was the end of it. So again, to pick 4 points out of that kind of trading activity, really tough. I was kind of short initially, got a quarter point kind of going short, then I got long 51.75, but lost a point on that, just kind of lost confidence when it kind of came down here. Re-entered long at 52, and then had to kind of get out of that trade, and then after four trades, lost a 2 1/4, I gave it away. We had the rally into the overnight session, but again, it's not kind of classic. We had blue professional bars kind of coming in here, but we hadn't really had exhaustion patterns kind of on the downside. It was fairly weak selling going on there. So we've had that breakaway. Let's see, on the 4,500 tip bar chart, it's broken into an uptrend, so it could be kind of goosed higher a little bit by the professionals kind of in the after hours, just because it's less liquid during the after hours. But we'll see. There we go. So I hope you had better luck over the last couple of days. I also got my fin box pulled out, went up to Hosogor yesterday, had an awesome session going off, but the short break, if anybody has surfed Hosogor at La Gravière, which is where they hold the pro, the short break at La Gravière is a bitch, and as I was coming out, got my leg rope kind of caught around my fin, and it pulled out the fin and the fin box. So not a good day. Anyway, hope you traded better than me over the last couple of days, and looking forward to better days coming up.